Good morning, investors and traders. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and we are covering the US session today, and hence I'm saying good morning to you guys, even though I am based in the United Kingdom. So what I'm really looking at in terms of the US markets is that the futures are once again trading to the upside, and then this comes very much on the heel of the massive gains that we have seen. So if you look at the Dow Jones chart, which I'm just looking at currently, you can see that pretty much for the past 5 consecutive days, the Dow Jones futures have been trading higher on the daily time frame. And as of today, the Dow Jones futures have pierced the upper line of the Bollinger Band, meaning the price has gone too far and too fast. And this means that the price is very likely to reverse and trace back towards its 20-day simple moving average on the daily time frame. Having said this, there is no doubt that bulls are still very much in control of the price because the Dow Jones Industrial Average is trading above the 50, 100 and 200-day simple moving average on the daily time frame. Now, in terms of commodities, when I look at gold prices, I do see that yes, there is a bit of a selling pressure which was building up today earlier in the morning, and that of course comes on the heel of the sell-off that we've experienced yesterday, because the price for gold, the precious metals price on the daily time frame failed to break above the 100-day simple moving average, something that we mentioned in our analysis, in our fundamental analysis yesterday. Because if the price cannot break above the 100-day simple moving average on the daily time frame, it is going to challenge the 50-day moving average, and that means I will move to the downside, or leg to the downside, that this pretty much move is going to be. Now, the reason that is happening is because obviously there's a risk on rally which is very much heated up on the back of this coronavirus vaccine, and of course stimulus and fiscal support is very much supporting the risk on sentiment, and that is pushing the stocks higher. Because remember, yesterday the Dow Jones Industrial Average put an all-time high, and that means the investors are still very much chasing the risk on rally rather than the risk of rally. However, if we look at the data which was released on Monday, the CFDs data that shows the investors' positions in the hedge fund positions and institutional investors' positions in gold, what we see is that yes, there is a still move to the upside. Investors and traders are still very much committed for gold prices from the institutional side to move higher. So perhaps what they're really banking on is more troublesome for the risk on rally going into 2021, meaning that the equity market can fall and then gold prices can pretty much move to the upside. Or perhaps the other bet at the same time is that yes, we are still seeing enormous amount of a deteriorating situation with respect to coronavirus in the United States. That means the Federal Reserve isn't likely to change its monetary policy anytime soon, and that could perhaps weaken the dollar further and perhaps strengthen the gold price from here onwards. All right, folks, that's all for today, and I'll see you guys next time.